Welcome back to Ben's Book Club. Today we are diving into the book Super Made Simple, 7th edition by Noel Whittaker, to reveal how to turn retirement confusion into hundreds of thousands of dollars. Now, Whittaker is an absolute Australian finance legend. We're talking an Order of Australia recipient and the author of 26 best-selling books. In this entirely rewritten 170-page guide, he demystifies what is arguably the single most important, yet somehow least understood part of personal finance. So our goal with this explainer is to translate his brilliant insights into a plain English, actionable roadmap. We want to show you exactly how to use your superannuation as a highly strategic wealth-building tool rather than just some locked box you ignore until you retire.
Okay, let's jump straight in with a crucial provocation from the book. Whittaker's core thesis is crystal clear. Relying on the government pension is a dangerous game. The age pension is simply not designed to fund a comfortable lifestyle, it's merely a safety net. Everyday Australians really have to wake up to the reality of their future retirement costs. So whether you're a millennial focused on building wealth or a pre-retiree looking to optimize your assets, understanding that the heavy lifting of your retirement falls squarely on your shoulders, well, that is step one.
Here is our roadmap for today. First, our retirement reality check. Then, how super acts as the ultimate tax haven. Strategies to boost your balance, avoiding costly mistakes, and finally, navigating the updated 2006 rules.
Let's start with Section 1, the retirement reality check, and breaking the set and forget myth.
We really need to break this set and forget mindset right away. So many people, especially those in their 30s and 40s, just severely underestimate exactly how much money they're going to need to retire comfortably. Superannuation is so often ignored, or people just view it as incredibly boring right up until retirement suddenly looms. And that is a massive missed opportunity. The crucial takeaway here is that you have to view your superannuation as an active financial lever. Whittaker emphasizes that treating your super passively is kind of like leaving an incredibly powerful engine turned off. It is literally one of the most robust, legally protected wealth creation tools available in Australia. By actively managing it rather than treating it as this generic passive investment bucket, you take total control of your financial timeline.
Moving right along to Section 2, Super, the ultimate tax haven. Welcome to the 15% world.
Look, a lot of people find super frustrating because their money feels completely locked away. But you will definitely change your tune when you realize you might literally be lighting your money on fire outside the system. This is the real aha moment of this explainer. If you invest outside of super, you could get hit with your marginal tax rate, which runs as high as 45%. But inside the super system, your investment earnings face a maximum tax rate of just 15%. And actually, it gets even better. Once you transition into the retirement phase, that tax rate drops to 0%. Zero! By just shifting how you view this system from a locked vault to a highly lucrative, legally protected tax shelter, you can save an absolute fortune.
All right, Section 3, strategies to boost balances. Specifically, maximizing your contributions.
Now that we see that massive tax advantage, it's time to actively play the system. Whittaker outlines actionable tactics you can use to lower your personal income tax bill right now, today, all while building massive wealth for tomorrow. To cut through the financial jargon, we first need to understand concessional contributions. Just think of concessional simply as pre-tax, like salary sacrificing. When you deposit pre-tax money into your super, it gets taxed at only 15%. For high earners, this is an incredibly effective way to lower your overall taxable income. You're essentially legally diverting money away from the tax office and putting it directly into your own future pocket.
What's really fascinating is the math behind this strategy when you put it into action. Let's look at a case study directly from Whittaker's book. Step 1, you identify a cash surplus. Step 2, you make a personal deductible contribution. Through the sheer magic of tax deductions and refunds, the book shows how a $13,000 cash surplus can effectively morph into roughly $16,000 of wealth in the very first year. Talk about highly efficient wealth generation.
And that's not all. Whittaker outlines a wide array of legal strategies that can boost your final balance by up to 40% as you near retirement. Beyond salary sacrificing, you can utilize non-concessional or after-tax contributions. Then there are government co-contributions, which is essentially free money that low to middle-income earners completely miss out on all the time. Plus, you can use spouse contribution splitting, which is a really brilliant tactic for moving super into a spouse's name to potentially improve their age pension eligibility later down the line.
Which brings us to Section 4, avoiding costly super mistakes, or what we like to call the price of ignorance.
You really have to tread carefully here, guys.
The rules governing super are super strict, and the Australian Taxation Office, the ATO, will not hesitate to hit you with heavy penalties if you get these complex regulations wrong. Ignorance is definitely not an excuse, and the price of getting it wrong is incredibly steep. Just to give you an idea of the high stakes involved, consider this number. Whittaker warns that making a single mistake regarding capital gains tax inside your super could cost you over $150,000 in lost tax deductions. Think about that. The book dedicates an entire chapter to using super to legally reduce or eliminate capital gains tax on property and other assets, but you absolutely must follow the precise structural boundaries. Getting it right saves a fortune, getting it wrong is a financial disaster.
Furthermore, these mistakes aren't just related to the ATO. Simply choosing the wrong fund can silently destroy your wealth over time. When you are comparing industry funds, retail funds, or self-managed super funds, you always have to check the performance and the fees. When you compare a base fund with one that has just a 1% higher fee, the difference is staggering. Compounded over 30 years, that tiny 1% will aggressively eat away at your final nest egg, costing you hundreds of thousands of dollars.
Almost there. Section 5, navigating the 2026 rules and staying ahead of the ATO. Because this landscape shifts constantly, financial advice books have to evolve, and this 7th edition is completely updated for the legislative adjustments rolling out for the 2025 to 2026 financial year. Staying ahead of the ATO is mandatory at this point. This summary provides a quick checklist of the newly updated structural boundaries you need to know. You've got to be aware of the current transfer balance cap, which limits how much money you can move into that sweet 0% tax-free retirement phase. You also really need to understand the newly revised $3 million super tax. Now, Whittaker clarifies this is on realized earnings only, with indexing. And finally, the book dives into critical estate planning rules, specifically how your super is taxed upon death and how to minimize those taxes for your beneficiaries, including non-residents.
Before we wrap up this explainer, let's get into your immediate, actionable first steps. First, log into your account today and check your current fund's performance and exact fee structure. Seriously, go do it. Second, if you happen to have a cash surplus, strongly consider making a concessional contribution before the June 30th deadline to lower your tax bill. And third, sit down and review your spouse and estate strategies to make absolutely sure your wealth is protected for your family.
I want to leave you with one final provocative question. What is your projected super shortfall? Because let's face it, the age pension won't cover it all. So I challenge you to calculate that exact number right now. Find out what you are missing, apply just one active strategy from Whittaker's book to fix it, and subscribe so you don't miss an episode.